Mark, let's start with tech stocks and the sell-off we saw there yesterday. Anything new in this? Tech selling, is it that or is it buying the small caps? Is it both? What are the trends that you're watching here on stocks?
It's both, Anna. I think we've seen quite an incredible kind of change of trend in the last week, or in the last few days in particular. Now, is this the start of something sustainable, or is this just a blip? I think that's the really, really big question. I am in the camp that it's potentially the start of something sustainable, although obviously not at the pace of the rotation of the last few days. But I understand why there's still going to be debate about that. I think we've got to see what happens from the Fed meeting at the end of this month. We've got to see what happens on the political side. We've got to see what happens out of earnings season. But all those things, we've still got a couple of weeks to get clarity on them, which means that these themes of this big rotation, the broadening of the stock market strength, but yet the big index heavyweight suffering, that can continue for another week or so. And I also think that the kind of somewhat related theme of dollar weakness, is another theme that can continue for the next couple of weeks. So those two big themes this week can continue for now. Do they continue beyond July? That's what we need to find out.
OK, so let's talk about which assets have got the memo and which assets haven't got the memo. It sounds like the dollar's got the memo. It sounds like the yen maybe's got the memo. What about EM assets?
They really haven't got the memo yet. And you'd think like, hey, we're doing small cap, we're doing well, we're seeing rotation. It's a chance for value stocks. It's a chance for sectors that haven't been exposed to tech that are cheap. This really seems an ideal time for a lot of those EM markets around the world. You think of things like Brazil that have been exceptionally cheap and underperforming for a while, that are still related to the global economy, which is doing fine, should benefit from an easing central banks around the world, should benefit from the growth is still doing okay, even if not brilliantly, should benefit from the transition away from tech, should benefit from a softer dollar, lower yields, and yet EM stocks are not really roaring yet. Now, why is that? It's because of that yen clean out of the carry trades. Many of those EM positions were funded via yen, so that you at least earn yields in the interim until you wait for it to work. Yen is suddenly cleaned out, caused pain there, which has put people on the back foot. But that's not a sustainable dynamic. I think that ultimately, once the yen trade finishes playing through, and it may not have happened yet, we may have a bit more to go on the yen trade, well, then people will pile into those cheap EM assets, and that can really get traction for the second half of this year.
But Mark, doesn't EM traditionally take its cue to some extent from the commodity picture as well? Can you connect the dots for us there?
It does to some extent, but remember, some of the biggest EM are China and India, and South Korea are commodity importers. So it's not quite as clear about that. It's about which sector you've kind of got. And I think EM now is such a diverse complex. The last big EM supercycle was the mid-2000s. That coincided with a commodity supercycle. It was also a credit supercycle. It was also the rise of China. So there's a number of coinciding themes. So people do equate in their head that commodities and EM are very, very similar. In reality, as I said, some of the biggest EM markets are actually commodity importers. And the EM story is very divergent now. And I think it can play off different themes. But there are many cheap assets out there in the EM world.